Welcome to the Group Dentistry Now Show, the voice of the DSO industry. Kim Larson and Bill Neumann talk to industry leaders about their challenges, successes, and the future of group dentistry. Visit groupdentistrynow.com for more DSO analysis, news, and events. Looking for a job or have a job to fill? Visit joindso.com. We hope you enjoy today's show.
I'd like to welcome everyone back to the Group Dentistry Now Show. I'm Bill Neumann, and as always, we really appreciate all of our listeners out there, whether you're listening to us on Google or Apple or on Spotify or any one of the other listening platforms. We appreciate that. Or for the folks that like to watch us on YouTube or somehow find us on the Group Dentistry Now website. Without you, we wouldn't have a show. And of course, without great guests, we wouldn't have anybody watching or listening. So we've got two guests on today. And actually, I think this is the first time we've actually had brothers on. So that's a first for us. So pretty cool. And they both are actually the co-owners of Healthcare Finance Direct. So we'll talk a little bit about, what that company's doing for the dental industry, for DSOs in particular, also the patients that those DSOs serve. So we actually have Tyler Johnson and Luke Johnson here today. Thanks, gentlemen, for joining us.
Thank you so much for having us.
Yeah, thanks, Bill.
Yeah, this is going to be exciting. So we'll talk a little bit about Healthcare Finance Direct. You both actually jumped into the organization back in around 2016. So give you a little bit of an introduction to Tyler first, and then Luke. Tyler is the Chief Executive Officer and is also a co-owner of Healthcare Finance Direct. And again, like I mentioned, started in 2016. The Johnson family purchased the organization, and that's when they began to turn around the business. Tyler has established and developed key partnerships that have empowered HFD to provide a finance offering for every single patient. And then we also have Luke Johnson. So Luke is the Chief Marketing and Experience Officer, and he also sits on the board and is also a co-owner of the organization. He's been a key designer and creator of the company's product roadmap and has increased, I don't know if this is a typo here or not, increased patients served by over 1,500%. Is that right?
That is accurate. Yeah, we've had a tremendous growth over the last 5 or 6 years that we're happy to share about.
Yeah, that's great stuff. So, hey, Tyler, did I miss anything? You want to talk a little bit more about your background, maybe a little bit more about your background previously to coming on board for HFD?
Yeah, absolutely. And it's my background is not necessarily unique to me. Everything that Luke and I have done in our careers has been together. It's really been family from the start. So our dad actually had a software engineering company growing up since we were little kids for about 25 years, and did all sorts of things in software from the oil, ag industry, the case management software for the court system, as well as building some practice management software and financing platforms inside of healthcare. And so Luke and I got some exposure to that and just entrepreneurship and having a family business from the start. And so we worked in that industry since we were about 10 years old. And Luke and I took two different paths. Luke was focused mostly on the IT side. He learned everything there is to know about engineering, building APIs. In fact, what he learned at 17, 18 years old was what allowed him to build the APIs needed to start some of our biggest accounts just a few years ago. And I actually took the more traditional finance route. So I got my finance degree. And I've always just had a passion for finance and the business side of things, organizing. Well, I shouldn't say organizing. I'm not very organized. Luke's the organizational one of the group. But what I've loved about finance and business in general is just taking something that has value and adding just more value to it, capitalizing on inefficiencies in the marketplace, getting people together. And then ultimately, that's what finance is to be able to drive growth or to drive opportunity. And so I've been completely on the opposite side. Luke's been strictly on the IT side. And so we really complement each other. Both of our careers, as we've mentioned, have been in this industry. So we started in our family business growing up. And back in about 2012, 2013, we've gotten more involved with HFD. HFD actually wasn't started in 2016. That's when the family ultimately bought the business. But it was started in 2009. And it was started based off of really noble idea that you shouldn't judge people's ability to pay based on their credit score. Sounds a lot easier to say, easier said than done. But coming off the Great Recession, there's a lot of people that lost their jobs, but it doesn't necessarily mean they weren't disciplined payers or didn't want to pay. And so we thought, well, I should say that the company originally thought that there were ways to analyze someone's propensity to pay without using their credit score. And so for about 5 or 6 years, they built some partnerships, some underwriting, and some trial and error, and built up, book of data. And a lot of that was built on top of the software that my dad's company had built. So that was the connection, where that company had built that software. And so Luke and I built some exposure to this company through that. And we started getting more involved, asking questions, trying to better understand the need of HFD, and what HFD was trying to do for providers. And we realized pretty quickly that HFD was sitting on gold. It was sitting on an opportunity that the marketplace was demanding. This idea of serving everybody, and it wasn't necessarily executing properly, but we bought into the vision from the early stages that if we can get the right people in the right place, get the right technology, and kind of view the world through a lens of what it could be, not the way it is, over time we can disrupt an industry. And so that's what's really attracted us to it. But we've been in the company different roles. I'll speak for myself, and Luke can add for him, but I started out as the financial controller. I was kind of in between the software company and HFD, helping out how HFD is just managing their internal corporate finance. And then I moved up to managing the actual operations, how the customer experience, how the patient was served, how they're presented financing terms, and then what happens during their program as they're paying over time. And so I then got promoted director of operations, and then COO 2 years ago, chief operating officer. And then last December, I took over as chief executive officer, which now I'm focused mostly on market facing, and we'll dive into what that exactly means, but understanding provider needs, provider pain points, and also working with the capital markets to make sure I understand what their needs are, and really being a bridge between those two.
Excellent. Thanks, Tyler. So Luke, it sounds like, I don't know if this was planned or not. So Tyler goes down the finance path, and you're on the software path. Did you think you would be working together? Is that always the grand plan, or no?
No, I've been trying to get away from him for the last 10 years, honestly. No, I'm just kidding. No, it's been great. It's been awesome with my brother as a leader, and our dad. We can't give him enough credit. I remember Tyler and I, like you said, it started 20 years ago with us sitting in our family little 5-foot jacuzzi, learning as much as we could from our dad, and him explaining all these innovative ways to change the world. And really, it's been so much fun working with Tyler. It's been a lot of fun working with Ron, but our team as well. Tyler, you stole all my talking points as far as the history of our family and whatnot. But I would say that it's been an interesting ride. The marriage between technology and finance. Ron and I, our dad, Ron, he's a tech background. We would always think that every problem needed a technology solution, and Tyler with finance would always think that every problem needed a finance solution. It wasn't only till a couple of years ago where we realized, there was a fintech solution. There's a whole industry dedicated to the marriage between technology and finance. And once we came up with that revelation, we've been able to grow, 1,500%, like I said, Bill. So it's been a lot of fun. I'll say my current role with HFD is Chief Marketing and Experience Officer, like you said. My previous roles were Technology Officer and Product Officer. The underlying theme, I guess I'd say, with all of my roles in HFD is making sure that we're spending our time on the right things. Whether our title was, lower on the totem pole or higher on the totem pole, we were always, this white blood cell in the company, just to make sure that, we were doing things that truly provided value to customers, and, did things that allowed customers to, I guess I'll say it this way, where they'd actually pay us for our services. And yeah, that's really all I could think of right now.
Yeah, that's great. So it's kind of interesting. Let's talk a little bit about this, because it's probably best that you explain exactly what HFD, Healthcare Finance Direct, is, right? So you're not a lender. So talk a little bit about that. I think that would help.
Yeah, absolutely. And, we've asked ourselves for years, what exactly are we, and that's the tough part when you're trying to pioneer and innovate inside of industry, is you can't use, conventional wisdom or conventional thinking to describe yourself. So ultimately, we were buy now, pay later before it became cool. And we'll talk about that trend over the past, couple of years. A lot of people are jumping into it. But we had the ability to pay over time. We built this technology, this infrastructure to allow people to pay over time, and essentially mirror and replicate the entire infrastructure of a traditional lender. So an all-in-one solution, end-to-end fintech platform. And Luke can dive into the specifics of what that platform means, but essentially what that does is it gives the provider the keys, the engine to the infrastructure that a traditional lender would have. But it puts them in control, right? And that's the thing with in finance, traditional lending is, he who has the gold makes the rules a lot of times. And so when you're trying to get, money from the capital markets, they're oftentimes giving you programs that are bank backed or bank driven, and you don't really have a ton of flexibility. It's not necessarily tailored to your customer. And what that results in is oftentimes not very many approvals. They'll lower approval rate or conversion rate. It possibly could be punitive or somewhat predatory interest rates even. And what we said was, let's just build a program that essentially puts the provider in charge of their financial program, and then listen to them and their needs. And that's what we did for about 9 years, where the provider was in complete control, which they still are today, but I'll get into the difference into where things have evolved. But for the first 9 years, the provider, in order to essentially be the owner of the financial program, essentially was the bank. They were keeping all of these patient contracts on their balance sheet. They weren't getting money up front. And again, Luke will dive into the specifics there. But what that meant, though, was we've actually accumulated for 9 years a bunch of data on inside dentistry about how people pay, people that traditional lending companies wouldn't approve. And so we found ourselves in the past couple of years and really reinvented ourselves during COVID last year, and said, we have all this data, and in fact, we have hundreds of thousands of records, over 800,000 records, primarily in dentistry. And a lot of it with customer data that most lenders will decline. And so we said, here's an opportunity to really disrupt this industry, bring in the capital markets, get them involved, and really provide a solution that the lenders currently cannot.
Yeah, and just to, I guess, add the marketing side of the context that Tyler just provided, we have, at the end of the day, we have 3 products. We have a sale at origination product, which is a non-recourse. You get your money up front. It's for any provider that would rather have their money up front at a discount. They could get paid for it. The key there is up to 100% solution, right? It's not just that top half that the banks engineer for. It's anyone that walks in the door. There is a solution for them to be approved. The second financial product is balance sheet, which, as Tyler said, the history behind that was it was our only product for 10 years. And it worked for some specific providers. It was more of a niche. It really only worked for the very large providers, the ones with huge finance teams that could actually go shop it after the fact, right? They would accumulate the receivables and they'd end up shopping it anyways. The third financial product that we have is a structured portfolio sales, which is basically just a hybrid of the two that I said. So we have a non-recourse option, a recourse option, and then a hybrid option that allows them to keep all of the control, tranche up the receivables, the patient contracts that were originated. And if they want to, if they have, a strategic investment that they need cash for, then they, sell a portion of your portfolio so that you could, have access to the cash to fuel growth in some other area of the business. But you don't have to walk away from those higher yields right up front. So again, these are financial products that empower the healthcare provider to choose for themselves what is best. And really that flips the entire market on its head. For anyone that can't pay cash or insurance, it was basically just prime customers that would have a solution. You already have sunk costs into the people that turn away. Tyler will talk about this more. But what we're seeing is that you end up getting more volume across the credit spectrum because of the fact that you're able to market this 100% approval.
Talk about the issues that you see out there. So you probably have problems, some issues at the provider level, right? And then there's of course the issues at the patient level as well, right? So you've got patients that may not qualify or may want certain type of plans, and then of course the provider may have be in a certain market where you have people that may not qualify, or you may have a mix. So talk a little bit about that, and then how HFD addresses those issues in the market.
Yeah, absolutely. And it's funny, for years at HFD, we've debated about who exactly is our customer. Is it the patient or is it the provider? And we've had some internal debates about that. And we finally just recognized that it's both. Let's just have, world-class standard for both the provider and the patient. Ultimately, we don't sell direct to consumer, so we're not lending to the customer. This is, we're building programs at the point of sale for the provider. So essentially the provider is paying us. But they're paying us to serve their patients, right? And so we've addressed, the value exchange there for both. And so how we aim to help providers is to, number one, grow their patient base. I mean, and that's also on the flip side where that helps patients is we don't believe that any patient should get turned away from healthcare. We think that we're optimists in that we think that most people who actually want a healthcare procedure want to pay. We think the data supports that. And it's a pretty revolutionary idea because, again, with healthcare, as everyone listening knows, it's not a collateralized asset. It's not selling a car and you go repossess it if somebody doesn't pay. You can't repossess their teeth, and so traditional lenders, traditional financiers typically don't want to lend to the traditional credit spectrum. And so they only want to lend on the traditional bank model to people that frankly don't even need the money or that have other ways to pay. And it's primarily about 40 to 50% of people are approved inside dentistry, the dentistry vertical. And so what we aim to do is to double that. We want a plan for every single patient, 100% approval. And it's not even about us, it's about what the provider wants. If the provider wants a solution for 75% of the spectrum, we can do that. It's whatever their need is, depending if they're trying to drive growth and maximize conversion. If they're trying to preserve a certain margin, then we could tailor for that. If they want to drive extremely customer-friendly terms, we offer 0% APR products up to 12-month terms. Across the entire credit spectrum, by the way, which is something that nobody in the industry can say. 100% approval, every single customer, 0% APR up to 12 months. And we can do that. And so from the provider's perspective, it's really three things: drive more customer volume, increase net contribution margin. So one thing that we have substantial data on is we always like to say the customer you say no to is worth 7 times more than the ones you're already saying yes to. So the one that's walking out your door, the one that you already brought them in, set them in the chair, you gave them a plan, diagnosis, what you need to do. And if they're walking out the door, you have sunk costs already built into that. And so it lowers the customer acquisition cost and allows you to essentially capitalize on every single opportunity, every single patient that walks in the door. And then on the flip side, for the patients are, number one, gaining access to care. We really take pride in having the most customer-friendly terms. A lot of the other people in the space will do almost credit card level interest rates, and we take pride in not going there. We don't want to do that. One, because we think it's not good for the customer. We think it ultimately hurts conversion. But we think there's ways, and it's the challenge we put upon ourselves to innovate of how do we make it sound and sustainable while still being customer friendly. And so it's better for everybody. It's easy to understand for the customer, and then easy to understand for the provider.
Bill, one thing I'd like to add to that too, when talking about, the provider's problem, is the CFO or the VP of finance, whoever we're talking to, it's typically the person on finance. They say, yes, this is amazing. I love it. I want it. But, how are we going to roll this out across, 150 centers? So, retention and engagement is a huge deal. And that's why we've taken an engaged approach to, like, we send teams to all of the locations if we have to understand their workflows. We have multiple different options for origination. We have our own self-hosted Easy Apply, but we also partner with a few lender aggregators that have a lot of the prime lenders baked into their software, because a lot of these DSOs already have contracts and I guess engagements with other prime banks. We love them. We have great relationships with them. At the end of the day, we're looking for a way to provide a plan for every single patient, and we're happy to work with the prime banks that they have in place to make that happen. So we have an origination product for every situation. And there's a lot of different, circumstances out there. There's no one size fits all. And we've, over the last 10 years, made all the investments necessary to custom tailor the solution for the DSO we're working with.
Yeah. And I'd like to point this out real quick, because Luke hit the nail on the head here, which is the reason why we've purposely positioned ourselves as a platform and not a lender is so that we can essentially be the advocate for the provider. So we are completely agnostic to the approach the provider wants to take. If they want, care credit as a prime option, which care credit is great. We have a partnership with them. We have a waterfall product with them, the only ones in the space to have a care credit waterfall. And we're in multiple enterprise DSOs, Sage Dental, Deca Dental, on the care credit waterfall. We are happy to pick up all the care credit turndowns. So anything that care credit declines, we can approve everybody else. And it's driving tremendous conversion and an uptick in overall revenue and overall patients served for those providers. And that's something we've built over the past 18 months, I'd say during COVID, and we've launched with a few DSOs, but we really hope to scale that with care credit over the next few years. But we also have a product that, like Luke said, the Easy Apply, where for the smaller DSOs, we could get into a distinction that we're seeing with smaller offices, even the mom and pop